Hello, everyone. Good morning, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. I'm so grateful, thankful, and excited to welcome you to another promising session as we delve into the current market structure from a technical standpoint. So before we kickstart the session, let's first of all confirm that we are good to go this morning. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section. Let's get to understand that we are on the same page together. So I would like to see your feedback, please. If you can see my screen and you can hear my voice clearly, type in hi in the comment section and let's get the party started. All right, so I would like to see some feedback, please. All right, so what we have here, okay, I can see some comments. All right, 882, good morning. Hello, Femi. Good morning to you. How are you doing this morning? Glad to have you around. 813, good morning. 7744, good morning to you. 1331, 6627, thank you very much. Hey, Carrie, how are you doing this morning? Thank you very much for your confirmations. All right, all right. So let me take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you to another promising session on the Xtrendspeed Live. Well, I've done a recent I've conducted an analysis on the instrument on our watch list for today. So I'm going to be sharing with you what I was able to find, as we have very simple and insightful setup that we are going to be using to guide our trading activity. So we are going to be focusing on a comprehensive price action perspective, as we have always done. We are going to be exploring the recent market movement and chart patterns to uncover valuable insight that could greatly influence our trading decisions for today. And for those who are joining us for the first time, you are highly welcome on board. So what we simply do here is to come together as a community, gathering in anticipation of both the New York and the New York session. And during this time, we want to be reviewing, managing our current position, while we also aim to position ourselves strategically for today's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, as we come here together as a family. Well, at first it might look a little bit overwhelming since this is your first time with us, but trust me, with time you get to understand how this works and you will be able to use the information you are gathered here to make your independent decisions on your own account. So once again, I welcome you on board. Now, with that being said, here we are going to be diving right into the business for today, as we in fact the last 24 hours has been very profitable for everyone in the house here, as the market moved just as expected, respecting our structures and moving uniformly in our direction. So we are going to be looking at that. So we have a very interesting review to happen today, so I implore you to stay tuned in so that you don't miss out on any of the insightful ideas we are going to be deliberating on today. So as usual, the first thing we are going to be doing today is to check on the economic calendar. As we all know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And with the information we get there, we can be able to position ourselves in such a way that we can catch any potential trading opportunity prior, during, and even after the event. So for today, Thursday, July 13th, we have one high impact event coming in from the US economic docket, and that is the producer price index. And the producer price index is released by the Bureau of Labor Statistics and Department of Labor, and it measures the average changes in prices in primary markets of the US by producers of commodities in all states of processing. This is a very high impactful event, as a high reading is seen as positive and bullish for the US dollar, whereas a low reading is seen as negative. And from the previous data we have here, we had a 2.8% for the month of May, that is the year on year, and we have a general consensus where economists are projecting a 2.6%. So this is a sign that there is a likelihood of contraction in the producer price index. So we are going to be looking forward to what the actual data is going to be like. Is it going to be just as expected, below expectation, or even beyond expectation? And of course, we're definitely going to be seeing how market participants will be anticipating this event, as it would reflect on the chart as price action. So with this information we have here, we shall be diving right into the chart to look at the current market structures from a technical standpoint. So the first instrument we are going to be taking on today is, of course, as usual, the US All Spot. Now, so far so good this week. The the US All Spot has been very profitable for us, though we started the week on a negative note, as we had a couple of losses after taking some buy positions and some sell positions. But from the look of things, from the activities in the last 3 days now, we were able to recoup the loss incurred, and also was able to add more profit on top of it. So before we go into the details of what our expectations is going to be like for today, we are going to be looking at how the week started for us all in this community. So at the beginning of the week, we acknowledged that price action was trading above our key level. Remember, we had our key level for the week situated at the $72.50 level, and you know how we do it in this community. If price action remains above our key level, just like it did here, we are going to be looking out for structures and patterns that will support the idea of buying this commodity. Now, in addition to the fact that price remained above our key level, was this interesting range that was observed during the first half of the week. Initially, price action was ranging between the $73.60 level, and before we started seeing an expansion which further emphasized the level of indecision in this particular market. So we saw price expanded, occupying that range between the $74 level and, of course, the $73 level, to give us an insight into how strong the indecision phase is. Now, during the live session on Tuesday, we were able to understand how sellers have been struggling to break through the $73 zone. As you can see here, every attempt by the sellers to break through the structure has been met with strong resistance from the buyers. See what happened here on Monday. We saw what happened here during the New York session on Monday, and then we saw what happened here during the later part of the New York session, giving us signs that sellers were really struggling, as the strength of the buyers around that area was so strong that sellers were finding it difficult to break through that structure. And this was a clear sign for us that we might likely be going bullish at this point in time. So we identified that zone as our temporary demand zone. Then, in addition to the structure we identified here, are a couple of trend lines which we said we were going to be using to guide our trading activity throughout the second half of the week. And one of the trend lines here is this descending trend line after connecting the series of lower highs. Remember, we were thinking price will be dropping to the downside, where we had a sell which went into a loss for us. Then secondly, we had identified this ascending trend line after connecting the series of higher lows. And with the simple trend lines here, we said we were going to be using it to guide our trading activity in such a way that a breakout retest of the descending trend line will be that opportunity we are looking for to buy the US All Spot, and this was exactly what happened here. We had the breakout of both the trend line and the $73.20 level to welcome our second buy position for the week. And remember, we were able to maximize the potential of this move by adding more position to our existing trade as we identified levels prior to this move at the $73.60, the $74 level, and of course the later on we identified the $75 level during the New York during our live session yesterday. So it has been quite a very profitable trade for us as we currently running with over 300 pips in profit on all four positions. And for those who took advantage of these opportunities, well done to you for being on standby to have caught this move. So what we are going to be doing right now is to ensure that we secure all buy positions. As you all know how we do it in this community, as soon as price action moves significantly well in our favor, we definitely want to be moving our stop loss to lock in the profit and wait to see if there are still more opportunities to maximize this bullish move to the upside. And from the current market structure here, I'm of the opinion that we should move all stop losses to that area between the $75.42 level and of course the $75 area. Of course, we want to give room for price action to breathe as we might still see a scenario where price could retrace a little bit to the downside to incite a trend continuation to the upside. So let's ensure that we have enough room for price action to breathe on this current position. So with that information here, with a well secured position at this point, let's get ready to anticipate the New York session today. So now, based on this current market structure, what is our plans? What are our plans to maximize this move? Are we going to continue buying the US All Spot today, or are we getting ready to sell the US All Spot? Well, the first thing I want us to do here is to acknowledge the highest point price action has been for this week, and that is exactly around that $75.90 zone. So you can see what has been going on here since the New York session yesterday. As soon as price got into this level, we have been noticing how sellers continue to reject that area, making it difficult for buyers to break out of that level. And what this simply tells us is how strong the sellers are at this particular point in time. And one of the things that we could start considering right now is the fact that there could be some profit-taking activity going on behind the scenes. And if you all know from a psychological perspective, for those who had bought the US All Spot at a very cheap price, let's say around the $73.20 level, who had rolled this move all the way to the upside here, will start thinking of how to close some of their position, hereby recouping some profits along the line. And as a result of this kind of profit-taking activities always reflect on the chart as a retracement phase, probably in anticipation of another wave of bullish momentum. So we are going to be taking into consideration the potentials of sellers in this particular market, despite the fact that we are still looking out for buying opportunities. So before we talk about the bullish expectations here, let's first of all talk about the potentials the sellers could have during the New York session today. Now, when we zoom into the current structure right here, you would have noticed that since the beginning of the early hours of today, we have seen a support line along the $75.55 area, which has been negating all attempt by the sellers to break through this structure. And if we are going to be considering selling the US All Spot today, I'm of the opinion that we will need a significant confirmation for that to happen. And one of the things that could happen here that could make us change our bias from bullish to bearish is to see price action slice through the $75.55 area. First of all, remember, we are not getting too excited here. This is a very strong bullish momentum, hence we need confirmations that sellers are actually gaining momentum at this point, and that this breakdown here is not going to be a false breakdown. And what we are going to be doing as soon as price breaks down the $75.55 level is to scale down into a much more lower time frame. It could be our 5 minutes, 10 minutes or 15 minutes time frame to look out for confirmations which would reflect on the chart as a retest of the structure. And a retest of structure followed by continued selling pressure is a sign that buyers are finding it difficult to climb back above this level. Then we could start considering selling the US All Spot. Then there is a caveat to this opportunity here, and one thing we want to note here is that this sell momentum here, if it happens, it's going to be a counter trend opportunity. So if you are not a counter trend trader, you are not a short-term trader, or you don't feel comfortable taking a counter trend opportunity, well, I will advise you to stay clear of this position. But if you feel comfortable taking a counter trend opportunity, this might be an opportunity to take some more. I think about, let's see how many pips that will give us, about 100 pips thereabout, to maximize your profits on the US oil portfolio. Now, with this situation here, I want to re-emphasize that this is a counter trend opportunity. And remember that since the beginning of the week, we had an ascending trend line, which has been helping us to maximize the bullish momentum we've been enjoying since the beginning of the week. Now, if price really does drop below the $75.55 area, we could see a situation where price will drop back into the trend line, that ascending trend line, which also shares a confluence with a $74.55 area. And depending on how price action reacts to this confluence will determine what our next line of action will be. So if we begin to see buy pressure resume around this area, then at this point we want to be considering buying the US All Spot. But if price action drops below the trend line, breaching the trend line to the downside, then we are likely going to be seeing a sell-off, as this will be the first time price action will ever break down that trend line. Then we wait out for confirmations like a retest of structure to join that bearish move to the downside. So this is how we are going to be selling or taking advantage of a counter trend opportunity in this particular market. So you want to be marking out these levels on your chart, as they are very, very important in helping us as a reference point to guide this opportunity to the downside. Now, in as much as we've discussed the potentials of sellers at this juncture, we can still not ignore the potential that buyers could break out of the structure. And remember, at the beginning of the week, we have been witnessing a very strong bullish momentum, and this whole consolidation phase here has a high tendency of transitioning into a trend continuation pattern. So in that case scenario, we are going to be anticipating a breakout of the $75.90 level here to incite another opportunity to buy the US All Spot. Now, if I'm going to be buying here, and if you are with me on this position, that is, if you have been profitable since the beginning of the week on the USTech100, of course, we want to be having a buy stop order above the $75.90 level, leveraging on some of the profit we had made so far this week to test waters around that area and see if the buy position will click. So if you are very profitable on the US All Spot, well, we can afford to risk some of our profits we've made so far this week to test waters around that area. However, if you are new into the US All Spot for this week and you've not been part of this journey since the beginning of the week, I would call on you to exercise some level of patience at that juncture. So what you are going to be doing when price action breaks out of the $75.90 level is to remain patient and scale down into your lower time frame, where we want to look out for confirmation which would reflect on the chart as a retest of structure, signs that sellers are finding it difficult to drop below this level. Then we are going to be looking out for buying opportunities to join that bullish move to the upside. So if you are new to this one, I would advise you to exercise some patience, wait for the breakout of that $75.90 level, retest of structure on the lower time frame before joining a position here. So mark these levels out on our chart, secure your current position, and let's see how price action will play out from this area. Our center of focus for today is between that range between the $75.90 and the $75.55 area, where a breakout retest of any of the support line, resistance line will welcome trading opportunities. Then in addition to that structure, here is a couple of trend lines I was able to identify. If you look closely on the chart, you will see a couple of light trend lines here, which I also want us to use to maximize this move to the upside. So if price still remains above that trend line, we shall feel comfortable buying the US All Spot. So let's see how price action plays out. If you have questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. And you can as well use that time to mark out those levels on your chart, screenshot my screen if you want to, so that you can use it as a reference point when you're about to make your independent decision on your account. Okay, I see your comment. Zegumes, good morning to you. Nest57, good morning. 7096, good morning. Hey, Valeric, how are you doing this morning? Good morning to you. 2935, Economoney, good morning to you. Glad to have you around. All right, so in the absence of no questions, I want to assume that we're on the same page, so we shall be moving on to the next instrument on our watch list. All right, so the next instrument on our watch list is the USTech100, another very profitable trade for us this week that we have here. And in fact, it was been a very interesting week so far for us on this option. So before we go into the details here, let's run through how the week started for us on the USTech100. So at the beginning of the week, we saw this range where price action was initially caught within, and that was the $15,055 area before that range widened a little further into the 14,935. And with the situation we have here and continued buy pressure just right around that area, we were looking out for buying opportunity if price action ever breaks out of our key level. Remember, this was our key level at the beginning of the week, and you know how we use our key level in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying. And since Monday, we've continued to see buy pressure, leading to the breakout of that 15,055 level. And since then, we have been buying this commodity. And in fact, this led into the breakout of that descending trend line, which has been supporting this bearish momentum in the last couple of weeks. Remember, we had this trend line since the beginning of this month, and a further breakout gave us a confirmation that this bullish momentum will be solid. Now, with the situation we have here, during our live session yesterday, this was what we saw here. We were around here during our live session yesterday, where we identified this this simple setup here, where price action was caught within the 15,165. Remember what we said here during our live session. We said we were going to be looking forward to a breakout of this area to give us more opportunity to maximize the momentum to the upside, which is exactly what happened here. And since then, price action had continued to move significantly well in our favor. Now, if we look at the total of profit we had made so far this week, if you had only taken one position since the beginning of the week, you will currently be running with over 400 pips. Now, let us talk about those who are taking multiple entries. As we projected here, definitely you will be close to 1,000 pips on this single position. So since the beginning of the week, we have been buying the USTech 100. Now, for those who still have a buy position running at this juncture on the market, I will be suggesting that you move your stop loss to secure your current position. As you all know how we do it in this community, as soon as price action moves significantly well, we definitely want to be moving all our stop losses to secure the current position. And from what we have here with this market structure, I will be suggesting that all stop losses are moved anywhere below the 15,360 level. Of course, you know that we want to give room for price action to breathe, and let's give room for price action to breathe on this one. Now, with a well-secured position at this juncture on the market, what is going to be our next line of action on the USTech 100? Well, before we go into the details of what our expectations will look like, I want us to scale up into the higher time frame so that we can have an holistic perspective into what is really going on the higher time frame, and let's see if we can find correlations that will give us a well-informed trading opportunity with the 1 hour time frame. So now going up into the 4 hours time frame, this was what we were able to spot here at the beginning of the week. And one thing for sure is the fact that price action has been bullish since the beginning of this year. Then we also had a trend line, which we used to guide our trading activity. This trend line has been tampered with. It was like this yesterday. Hold on a second. Let me redraw this trend line. Okay, it was exactly like this yesterday. So let me do some adjustments. All right, so beautiful. So this trend line here has been supporting the bullish idea since the beginning of the week. Remember, at the beginning of the week, we saw our price action was consolidating around that trend line right above it, continued buy pressure above that structure, and coupled with our key level for the week sitting at the $15,000 mark, we had the privilege of confirming that we are good to buy this move, and you can see we rode the move all the way to the upside. Now, with the look of things right now, price action has finally broken another key structure, which is the 15,300, a level which has been a strong selling niche since the second week of the month of June. Now, if you look at the structure in the last couple of months, you will see how that level has been a strong selling niche, negating all attempt by the buyers to break through that structure. And not until yesterday, we finally saw a breakout of that level to incite the strength of buyers in this particular market. Now, with a breakout of a structure here, you know how we do it in this community. We expect that from a technical standpoint, when price breaks out of a structure, there is still a chance that price could still come back to retest that structure in anticipation of another wave of bullish momentum. Now, when will this happen is what we don't know. Will this bullish momentum continue to the upside, or are we still going to have a chance where it will come back and retest the structure for another wave of bullish momentum? Well, at this particular point in time, the first thing I would like to do is to compare the nature of where price action is with past price action patterns. Let's see if there is something we can relate with around this area. So if we bring out our line chart, we will be able to identify something that we can work with for today. And this falls around the, let's see, 15,500 area, another psychological level considering the round figure of that price. So we have the $15,500 mark. So we want to be labeling this one on our chart. So this is a resistant level we are going to be watching out for. If selling pressure resumes there, or is it going to be a breakout of that structure to signal another opportunity to buy? So let's go back into where we are at this point, bring back our candle chart. So we are going to monitor how price action will be reacting to the 15,500 at this point. So move your stop loss on this current buy position, secure the current position, and for those who missed out on this opportunity, we have no other choice than to remain patient and wait for new structures to mature before considering selling. The 15,500 level is not showing on my lower time frame, so I would want to include it on my lower time frame. All right, so here we go back to the 4 hours time frame. So this is where we are right now. So let's see how far this is going to go. So we have the 15,005. A breakout of the 15,005 definitely will welcome more opportunities to buy. So if you're already profitable on the USTech100, you can place a buy stop order above that area. Risk taking advantage of some of the leverage, using your existing profit as a leverage to test waters around that area. So let's see what will happen here. And if price action gets into the 15,500 and selling pressure resumes, then we could look out for reversal patterns to join a bearish move, probably into that trend line in anticipation of another wave of bullish momentum. So that is how we are going to be managing our trade on the USTech100 for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. Hello, Betty Life. Good morning to you. Big Plex. Good morning to you. 5580. Thank you for checking in on us. Good morning to you too. All right. So, in the absence of no questions, I want to assume we're on the same page. So, we shall be moving on to the next instrument. Susie MB. Good morning. How are you doing today? So the next instrument on our watch list today is the GBPUSD, and on the GBPUSD too, it has been a very, very profitable position for us. Remember, price action hit our TP target yesterday, and this month, in the last 24 hours as well, price action has continued to climb and find new highs in this particular market. Now, before we go into the details of what our expectations are for today, let's run through how the week started for us on the GBP USD. Now, on the GBP USD, at the beginning of the week, we had a range where price action was consolidating for the first 6 hours, I think, giving us a clue into the level of indecision at that point in time. So we had price action ranging between the 1.28420 and of course the 1.28200 level. And you know, when we have this kind of flat channel, you know how we do it in this community. We wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down of the support line to give us an opportunity to sell. And prior to our live session on Monday, we already saw the breakdown of structure, and I told us all that I sold at the retest of this level to the downside. And during the live session on Monday, I told us all to capture this move at the breakdown of the 1.28, and we rode that move all the way to the downside. As we can see here, price action moved significantly well, 70 pips on the first position and about 50 pips on the second position before that bullish momentum began. And while reviewing this current market structure on Monday, we all agreed that we were going to be using this descending trend line to guide our trading activity. So as a result of this trend line, we were not able to take advantage of this buy position here because price was of course below our trend line, and whenever we have price below our descending trend line, we only want to be looking out for structures and patterns that will support the idea of selling. So we were thinking that this bullish momentum might likely be a retracement of that leg here, where price action is likely going to come back into the trend line to incite another wave of bearish momentum. And on the contrary, we said also that if price action breaks out of that trend line, then at that point we want to start considering buying the GBPUSD, and that was exactly what happened. We saw the breakout of the trend line, breakout of the 1.282, welcoming our first buy position for the week. And if you had missed out on that one, the market gave us more opportunity. We had a breakout of the 1.28420. We had a breakout of our key level at a 1.285, and we continue to add more position to our existing trade. Remember, on Tuesday we had this one. We also had this one on Tuesday, maximizing the potential as we rode it into our TP target here. Now, during the live session yesterday, we saw another setup to use to guide trading activity. Now, one of the parameters we've been using since Tuesday is this ascending trend line. And we agreed here yesterday that as long as price remains above this ascending trend line, we shall feel comfortable buying the GBPUSD. And during our live session yesterday, I told us all here that if price action climbs back above the 1.29350, we are going to be getting ready to buy. And for the breakout of the 1.297, we are going to be adding more position. And since then, see what has happened in this market. Price action has consistently found higher highs and higher lows, and gradually approaching my TP target, which is situated at around that area to 1.31 area and the 1.32 area at this point. Then during the early hours of today, I also identified another level along the 1.30150, which I think we are going to be using to guide our trading activity for today. Now, for those who have been profitable in the buy position at this point in time, well done to you for being on standby to have caught this opportunity. The next thing we want to be doing, if you still have a buy position running, is to move your stop losses to secure the current buy position. And for me, I'm suggesting let's move our stop losses to our entry points here at the 1.30150. Let's see how price action will play out above this level. Now, with the situation we have here, and for those who had missed out on this opportunity, well, I will be advising you to remain patient at this juncture, and let's see if price will come back and retest the structure. You know, from a technical standpoint, when price breaks out of a structure such as this one we have here, we expect that price may come back at one point to retest that level, or the trend line, to incite another wave to the upside. So these are the things we are going to be looking at for today on the GBPUSD. So let's mark these levels out on our chart, as we are going to be using it to guide our trading activity for today. Then another thing I would like us to acknowledge here is this resistance level here. This is the highest point price action has been before we started seeing this choppy situation go on here, and it falls exactly at the 1.30800 level. So I want to see another breakout of the structure for me to add more position to my existing trade. Of course, we're profitable so far this week, so we can afford to test water, leveraging on some of the profit we have made so far this week to test waters right above the 1.30800 level to maximize the potential of this bullish move to the upside. So on the GBPUSD for this week, for today, we are still very, very bullish unless price actions start to find lower lows and lower highs at any point in time. But based on this current structure here, we shall remain bullish and continue to look out for more opportunity to buy, especially if price action still remains above that ascending trend line identified in red color. If you have any questions whatsoever regarding what I just explained here, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions before moving on to the next instrument. Hello, Scott Benji. Good morning to you. Glad to have you around. Trust you are doing very well out there. Yes, and there's one more thing I would like to share with us all here in this community as regards to the current setup on the GBPUSD, and that has to do with the higher time frame, because it's very important that we take into consideration what's going on from a technical standpoint on the higher time frame as well. And before I talk about that, I also want us to deliberate on the reason why we have been seeing a very strong bullish momentum on the GBPUSD in the last couple of months. And one thing we all know at this point is that the UK economy is the most affected with the inflation plague amongst the major economy in the globe. And because of this, the Bank of England has been having rate hikes recently, and there's still a general consensus that there'll still be more rate hike. I think in 2 weeks' time, or I think next week or in 2 weeks' time or so. And because of this rate hike and the potential of more rate hikes, investors and traders are putting their money on the pounds. You know, when there is a rate hike, the currency that has the rate hike will definitely be giving more returns on the yield because of the interest. And as a result of this, majority want to put their money on the pounds because of the yield they will be making from this. And this is why we have been seeing this very strong bullish momentum so far. But how far will this momentum go is what I don't know. And in fact, I would try to extend my TP as we continue to ride this move up to the upside. So now going back into the 4 hours time frame here, I want us to quickly look at what we saw at the beginning of the week. And this was the structure we saw here during the early hours of the week, and it has been very bullish, of course, since the beginning of the month of June. We had a couple of trend lines, and the most important structure for this week was along the 1.285. And the 1.285 was our center of focus for this week, as we saw that level had been a very strong selling niche prior to the beginning of this week. And what we said here on Monday was that depending on what happens here will determine if we are going to be selling or buying. And remember, we saw some sell momentum initially, which brought price into this level before that structure was broken to this upside to give us that opportunity to buy. And if you look at what has been going on since the breakout of the 1.285, we have over 1.68% growth in the last 4 days, which is a very, very astronomical rate in the value of the pounds. Now, at this point in time, if you look at the structure from a psychological standpoint, you could agree that a retracement phase seems long overdue at this point in time, since majority who had bought at a very low price here would want to be doing some profit-taking activities just to lock in some of their positions, and this could reflect in the form of a retracement to the downside. That is why on the higher time frame I said if price still remains above that bullish trend line, we shall remain bullish, but a breakdown of that trend line might likely send price crashing back into that level at the 1.285, or we could see something like this happen on the last trading day of the week, which is always peculiar with profit-taking activity. So all these ideas here, we want to put them into consideration while we are reviewing this current market structure. So if we start seeing anything like a double top structure, head and shoulder pattern, a reversal setup anywhere around that area, the 1.30800 area, leading into the breakdown of that ascending trend line we identified on the 1 hour time frame, please let's get ready to be part of a bearish move as soon as the trend line is broken to the downside. So let's keep this in mind and continue to monitor price action here. So, in the absence of no questions, I want to assume that we're on the same page. So, we shall be moving into the last instrument for today, which is the XAUUSD. Now, on the XAUUSD, another very profitable position we had here in the since the beginning of the week, and in fact, the last 24 hours was also a phenomenal experience. Now, before we go into the details of what our expectations is going to be looking like for today, I want to share with you what we saw at the beginning of the week that incited the idea of buying the XAUUSD. Now, to do that, I want us to go up into the 4 hours time frame where we saw a simple setup that we said we were going to be using to guide our trading activity at the beginning of the week. Now, during the Monday live session, we had this setup identified. The first thing we saw here was the fact that price action has been bearish for a while now. So what we did was to take into consideration what has been going on in the market since the beginning of the month of June. And to do that, we connected a series of lower highs, which gave us this as descending trend line. In fact, we have a couple of them here that has been supporting this bearish momentum. But something interesting was observed around the 1900 zone. You can see that despite the very strong lower highs in this market, we saw how price action was unable to find lower lows, as we saw here that as soon as price got into the 1900 level, we begin to see how sellers struggled to gain momentum around that area, and this gave room for buyers to push price to the upside. We saw the first one here like 3 weeks ago, and then we saw the second one here during the course of last week trading session. In fact, price was unable to break the previous low, hereby giving us a higher low to work with. And when we connected a series of higher low, we had a bullish trend line in our favor to guide that momentum to the upside. Then in addition to the structure was this beautiful reversal pattern we identified here. After taking into consideration this impulsive move into that zone, price rejected that level. We saw price come back into the 1930, our key level for the week. Then the inability of price action to break down the previous low was a clear sign that we are gradually going to be seeing a reversal pattern in the form of a double bottom structure. And you know how we do it in this community. As soon as we identify such patterns, the next thing we want to be doing is to identify a neckline which we are going to be using to validate the potency of that reversal pattern. And coincidentally, the neckline shares a confluence with that 1930, which I said was supposed to be our key level to guide our trading activity. And you know what we said here, a break out of the neckline will be that beautiful opportunity we are looking for to join a bullish momentum to the upside, and that was exactly what happened in this particular market. And since the breakout happened, price action has moved over 300 pips in our favor. And don't forget that we had multiple entries on this one, so in fact we were very and outstandingly profitable on the XAUUSD. And for those who have been part of this profitable journey, well done to you for being on standby to have caught this move. Now, during our live session yesterday, we were able to identify a setup here which actually guided our trading activity prior to the CPI data yesterday. So I would like to share with you what we saw here during our live session on yesterday's live session. And let me zoom right into that structure where we were before the CPI data gave us that massive move to the upside. So this was where we were during the live session yesterday. Price action was caught within this range between the $1,936.50 level and the $1,933.60 level to give us an insight into the level of indecision at that point. Then in addition to that, I emphasize how important that area is in the market. Remember, it shares a confluence with that ascending trend line, and as long as price remains above the ascending trend line, we know that we are looking out for buying opportunity at this point. But a breakdown of the trend line will definitely welcome selling opportunities. So you remember what we did yesterday. We placed our sell stop order below the 1933.60, hoping that if it breaks down, we can capture that move to the downside, which of course never happened. And then we also had a buy stop order sitting just right above the $1,936.50 level to capture a bullish momentum to the upside, and this was exactly what happened. And also remember that we added another buy stop order just right above the 1941, which I told you yesterday that if price breaks out of the structure, we definitely want to be adding more position to our existing trade. And in fact, if you had missed out on that one, the market came back to test that structure to give us more opportunity to join. So since yesterday, we have been on a very strong bullish momentum, as you can see here. And if you took advantage of the two positions, you will currently be running with approximately, let's say from the first position here, give us about 240 pips, and the second position here giving us about 195 pips in profit, so roughly over 400 pips in profit at this particular point in time. And for those who took advantage of this opportunity, well done to you for being on standby to have caught this move. So right now, if you still have a buy position running, you know what we want to be doing next. Of course, we want to be moving our stop losses to secure all the current buy position, and I'm of the opinion that anywhere between the 1955 and the 1952 seems most appropriate to secure this position. Of course, you want to be giving enough room for price action to breed. Now, with a well secured position now, what is going to be our plans for today? So while I was trying to review the current market structure this morning, trying to decipher where price action is likely going to go, I was able to identify a simple setup here using key levels at this juncture in the market. And one of the things I observed here is that since price action got into the zone since the New York session yesterday, we have seen how price has fallen into a consolidation phase between the $1,963.50 level and of course the $1,955.50 area to give us an insight into the level of indecision in this particular market. And for the fact that price action remains within a range, we know how we do it in this community. We want to remain patient, waiting patiently for a new structure or a signal to come up before opening any position at this point. And remember, for those who are still in the buy position, we've agreed that we are moving our stop losses to secure this position while we continue to monitor how price action will react to this level. Now, with this range we have here, there is a tendency for this range to evolve into either a trend continuation pattern or a reversal pattern at this point in time. Now, before we talked about the bullish expectations here, I want to talk about the potentials that the sellers have in this particular market. What are the tendencies that sellers have, and what are the scenarios we want to see here that will make us consider selling? Now, if we look at the impulsive move that brought us to this point, you would agree with me that those who had bought the XAUUSD at a cheap price might be considering doing some profit-taking activity. That is, selling some of their positions just to scoop in some profit while still monitoring how the position is going to play out. And this, of course, normally reflects on the chart as a retracement of the previous impulse leg, where price action could probably drop back into the ascending trend line, which has been supporting this bullish momentum since the beginning of this week, or the 1941, to incite another wave of bullish momentum. And in fact, if we do have a breakdown of the trend line, then we could start considering a sell-off in this particular market. So now if we are going to be seeing a retracement phase here, what are we going to see here that will confirm and make us to be part of that counter trend opportunity? Well, based on this current market structure here, you know how we do it. Whenever we have a flat range like this, we remain patient and wait for the breakdown retest of the 1955 to happen before we join that bearish move to the downside. Remember what I just said there. We want to see a breakdown of the 1955. Then only after a breakdown happens, we scale down into our lower time frame. It could be the 5 minutes, 10 minutes, or 15 minutes time frame to look out for retest of structure before joining. We are not selling outrightly because we are on a very strong bullish momentum at this point, and so we need further confirmation that will make us feel comfortable selling the XAUUSD. But if you are not a counter trend trader and you're not a scalper, you might want to stay clear out of this and just wait for the culmination of that retracement phase before joining any bullish move here, because counter trend opportunities are very sensitive positions to take, as it will need a lot of attention in the market, as you would want to be moving your stop losses accordingly as price action moves in your favor. So for counter trend traders, a breakdown retest has a potential of bringing in about 140 pips in profit, so you might want to take advantage of that one and definitely move your stop losses accordingly. Now, if price action gets into the structure around the 1941 and the ascending trend line, then at this point we want to see how price action reacts to that level to determine what our next line of action is going to be around that area. So that is what I'm going to be looking at here for me to consider selling the XAUUSD today. Now that we've discussed the sellers' expectation in this market, let's go back into the major trend here, which is of course bullish, which is the most obvious possibility in this particular market. Since the beginning of the week, we have been very bullish. Why not still hold on to the idea of going bullish? Now, with the situation we have here, the chances of this price action transitioning into a trend continuation pattern is high. So at this point, I'm looking forward to buying opportunities at the breakout of the $1,963.50 level. Normally, from a technical standpoint, we should of course wait for a breakout to happen, then retest of structure before joining any bullish momentum here. Of course, that's what we should supposed to be waiting for. But since we are already profitable on the XAUUSD, we can afford to leverage on the profit we had made so far this week to test waters around the $1,963.50 level. So in that regard, I'm going to be having a buy stop order using some of the profit I've made so far this week to leverage that's bullish expectations around that area, and let's see how far that move is going to go. Then our stop losses should not be beyond the $1,959.55 area, just to ensure that we give enough room for price action to breathe there, and then we join the move all the way to the upside. But if you are new to the XAUUSD trade for this week, I will suggest that as soon as a breakout happens, you scale down into your lower time frame to look out for retest of structure before joining any trend continuation to the upside. But from my own personal perspective here, I am of the opinion that a bullish momentum still looking very promising based on this current market outlook. So let's see how price action will play out. Our center of focus for today is simply between the 1,963.50 and the 1,095.50 here, which of course you want to be marking out on your chart, as you will need it as a reference point to guide trading activities for today. So let's see how this will play out, and by tomorrow we shall come here again to review how well this instrument has been doing. So these are my views here on the XAUUSD. If you have any questions whatsoever, feel free to let me know in the comments section. I see your comment, 787. Peace be unto you too. Ansh, good morning to you. 596. Asen Dave. Okay, good morning. Sydney, good morning to you. Nafar, good morning. 8869. Abdi Fatah. It's It's Main. Good morning to you. I hope I pronounced your name correctly. All right. So, in the absence of no questions, I want to assume that we're on the same page here. So, let's see how the market will play out going forward. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here today. But trust me, the more time you spend here, you would eventually be able to adapt to our style and of course be able to use the information you have gathered here to make an independent decision on your account. So I look forward to seeing more of you. Stay tuned in. It's 11 a.m 10 a.m. UTC, 11 a.m. West African time on a daily basis. So be here and be part of the family. So on this note, I wish you all the best of luck during the New York session today. Remember, we are looking forward to the producer price index, which is coming up in about an hour from now. So let's get our position well secured. Use your stop losses, secure your positions, and be patient enough to wait for structures to mature before jumping into any position. So on this note, I wish you best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well our financial instruments has been doing so far this week, and of course get ready for the last trading day of the week. Do have a wonderful evening, everyone. Bye bye.